the declines that we continue to see in the US dollars, the flows behind it. What's the story that's telling you?
Sure, absolutely. Thanks, Tim. Thanks, Carol. And I think what's really interesting is we can look at this on a pretty long timeline. So I'm starting to hear comparisons late last week, today, yesterday, to this feels like early 2025 and Liberation Day all over again. And that's just because, yes, we're seeing some action in stocks and treasuries, but really this is a real sort of dollar-focused impulse to sell. And of course, on a shorter timeline as well, we can think about that in the context of what we saw last week, which was some pretty concerted movement in dollar yen specifically. And that was, as we reported, likely because some folks here in the US, the New York Fed acting at the behest of the Treasury, were reported to us to be checking rates and sort of calling into some banks and seeing where exchange rates were trading. So on a couple different levels, sort of in the near term and in the big picture, as you mentioned, Carol, questions about the U.S. fiscal position, policy uncertainty, those are all combining right now.
Carter, reading in this morning, Bloomberg reporting out the positioning is heavily one-sided. They said since Thursday, roughly 2/3 of options trades in the euro and the Australian dollar have been bets on further greenback weakness. So is this largely about dollar decline and not about bets on other currency strength backed by fundamentals?
It's a great question. I think the answer, honestly, is both. And a lot of that impulse, as we just talked about, is because of a declining dollar and questions about U.S. policy. But we are seeing relatively solid growth expectations in the rest of the world, whether that's Europe, maybe that's in Asia. And that really underpins the impulse to sell dollars as well. If growth in the rest of the world was cratering at the moment, we wouldn't be seeing this sort of action we're seeing in terms of dollar sales. So it's absolutely the other side of the coin as well.
We've got stock investors watching and listening to this program. What is the relationship between weakness in the dollar and what happens in the equity market? I mean, you made the comparison minutes ago to kind of feels like April 2025, and we all remember what happened to the equity markets during that time.
Absolutely. And I think that's the big question is, will we see that again, where typically you'd expect to see the dollar weaker as stocks strengthen. They have a negative correlation, particularly the dollar as a traditionally haven asset. We didn't see that late last year. The stocks, the dollar, treasuries, they were all falling together. So I think that's the big question right now is, will we see that again? I don't think we are yet. But in sort of a different picture as well, a weaker dollar should theoretically support domestic manufacturers. It should support exporters here in the U.S. That's typically what we'd see on a lag. But we also know that that's something the Trump administration has been vocal about as well. A weaker dollar theoretically, again, doesn't work instantaneously, but theoretically supports domestic manufacturing and exporters who are looking to sell to the rest of the world.
Hey, one other thing I want to ask you, though, but is it about global investors, and we've talked about flows into European equities, is it another sign, perhaps, that global investors are less interested in dollar-denominated investments?
It is possible, although I think it's too early for us to say at this point, as we knew last year. We don't have that data yet necessarily. And again, if we look at just the relative performance of U.S. stocks, they're doing all right. They're certainly holding up. I think what it could definitely be indicative of, and this is something we've covered a bit here at Bloomberg in the past, is hedging behavior. And what that means is you're a global investor invested here in the U.S. You might still want your exposure to U.S. stocks and U.S. tech, but you're going to hedge that dollar component of that much more than maybe you used to.
Mentioned Jay Powell tomorrow, the press conference. What are you watching for from your perch as somebody who watches FX?
Absolutely. I think just as we are in the rates in the treasuries world as well, any sort of forward guidance that we can get from Chair Powell, that'll be a tall order given the spotlight he's under at the moment, but any sort of future guidance about the outlook for rates this year, that'll be particularly impactful for the dollar as well as rates.
Right. If for any indications that there's higher rates coming, we're talking about that could put a floor under the dollar, correct?
That could definitely help. Yeah. And it's
Maybe.
funny. Yeah, no, for sure. JP Morgan, when they came out with their big currency forecast late last year, they're bearish on the dollar, but the big risk to their bearish dollar view is the Fed has to turn around and hike. Again, we might not see that, but that's the risk.
Although there is, it feels like a growing conversation about inflationary concerns, which would certainly lead the Fed possibly to keep rates as is or possibly hike them. We'll have to see.